In Money Watch now, the value of China's currency is stabilizing today after falling to its lowest level in 11 years. That tumble led U.S. stocks to plunge yesterday. The Dow closed 767 points down. Tom Hanson has more on the worst day for Wall Street this year so far.
The Dow closed down more than 700 points after falling more than 900 earlier in the day. The sell-off on Wall Street was fueled by China's move to significantly weaken the yuan against the dollar. That makes Chinese products cheaper on the worldwide market, which can hurt U.S. manufacturers. That's making investors around the world nervous.
We're hoping that at some point that this bottoms out. I think it's going to take us a few more sessions to get there.
In a series of tweets, President Trump called out China, labeling the devaluation currency manipulation that hurts U.S. businesses and workers. All of this follows threats from the Trump administration last week of more trade tariffs on $300 billion of Chinese goods starting in September, effectively extending tariffs to almost all Chinese imports. The president says China will pay the price, but investors don't see it that way.
Those are going to hit the U.S. companies first, and there's going to be a little bit of time which they're going to be able to withstand that pain, but eventually that will trickle down to the consumer, and that's where the American public is very uneasy.
China also announced it hasn't ruled out the possibility of slapping tariffs on U.S. agricultural products. Tom Hanson, CBS News, New York.
CBS News business analyst Jill Schlesinger joins me now to explain all of this. So when I woke up early this morning and heard about this, I thought to myself, okay, so the U.S. is calling China, saying that they're manipulating the currency. China says, no, that's just how the market forces work. You know, we're not doing it on purpose. But the outcome is what? The Chinese currency is worth less, so the tariffs don't have the impact that they could have?
Yeah, I mean, there's a couple of different parts of this. One is that you're absolutely right, that the currency goes down in value, and that means Chinese products in the global market are a little bit more affordable. Now, what does that mean? That means, let's say for a U.S. consumer, the currency goes down, the person importing the Chinese good pays the tariff, but the price of that product is lower because of the currency differential. So really what China is basically doing is saying, we're just compensating the end buyer, the business or the consumer, by lowering our currency so that the cost of the tariff does not get passed along. That's essentially what happens. There are some unintended consequences by doing that, of course.
I would think that is damaging to China to a certain degree because their manufacturers made a TV at a certain price and now they're selling it at a lower price.
Well, it's interesting. The real downside for a Chinese consumer is really that anything that comes in from the U.S. is obviously going to be more expensive. Now, that said, there's another unintended consequence. There are a bunch of Chinese companies that borrow money every single day, and those loans are usually denominated in U.S. dollars. If the Chinese currency goes down in value, it takes more money to pay off those loans. What happens if one big Chinese company can't pay its loans? We are talking about a potential cascading debt crisis. So that's the worst case scenario. We don't know if that's going to happen.
Is that why the stock market freaked out?
It's one of the reasons that it freaked out. The other reason is that when China lowers its currency value, it could also trigger what's called a competitive devaluation, meaning in China, the currency goes down. Well, let's say I'm a Vietnamese manufacturer. I don't want my product to seem more expensive. Now I want my country to devalue. And we have gone through bouts of this in the past where currencies basically are fighting to be the lowest possible on the market, and they usually lead to these really weird unintended consequences. Capital flows get screwed up and the world economy becomes destabilized. And that's really what that sell-off yesterday was about. Like, wait a minute, we thought the globe was pretty much okay. This could really be a thorn in the side of growth.
So then sort of moving forward, though, you know, what can we expect? You know, the president doesn't seem to be backing down. He keeps increasing the tariffs at kind of the pace at which he promised. Nothing has changed. And, you know, we're seeing the impact on farmers. And now we're seeing this. Well, where are we going?
Well, I think the big concern around the economy has to be with the consumer. And the reason is that this new round of tariffs that the president tweeted about last week, this is 10% on $300 billion worth of Chinese goods. But these are Chinese goods that actually hit the consumer wallet. So everything from your cell phones, your tablets, your video game consoles, your sneakers, your toys, just in time for the holiday season, right? Now, all of those are going to be subject to a tariff. 10% right now, but you know what? Maybe the president is going to raise it to 25%. And how the consumer responds to maybe that additional cost, we don't know. Right now, consumers are doing pretty well. Last quarter, they spent freely at a good clip. We are very much looking for the consumer to kind of save us in terms of the second half of the year. If prices start to rise, how will consumers feel? And if there is uncertainty in the universe about these tariffs, how too will businesses feel? We know that businesses have not been spending a lot of money in the last quarter or two. Will a business actually say, you know what? We're going to put our hiring plans on hold. You know what? We're going to give raises to everybody at the end of the year, but who knows? The world's crazy. Maybe we'll take a back seat. So the whole fear is that uncertainty will be the enemy of the economy to businesses as well as consumers.
Makes sense. Jill Schlesinger, thank you very much.
Sure.